Another trending ticker that we're seeing this morning is Affirm, the buy now, pay later provider, beating first quarter expectations, revenue jumping 41% from a year ago. Still, though, the stock under a bit of pressure here this morning, off just about 8%. We want to bring in Michael Linford. He is Affirm's Chief Operating Officer. Michael, it's great to have you. When you take a look at the numbers at face value, I just mentioned that 41% growth that you're seeing in revenue, 35% growth in volume, yet you are looking at shares under a bit of pressure today. How are you viewing the street's reaction to your results?
Yeah, we certainly don't look at how a stock trades in the early hours after we release earnings as an indication of the quality of the quarter. We posted a really great quarter. It's another one in a long string of great execution by the Affirm team. As you mentioned, 41% revenue growth, really an excellent spot to be, while we're delivering really good operating leverage at the same time. We posted a significant increase in our operating profit this quarter. And to be able to do both, to be high growth and to be delivering operating leverage at the same time is really impressive. And we're focused on continuing to do what we can to build our great business and to serve our customers and our merchants.
Michael, does this pave the way for a strong holiday season?
I think so. I think we're really in a great position right now. If you think about the things that we get to do to lean in for the consumers and our merchants, it's when we have strong unit economics, we've got a lot of growth and a lot of operating leverage in the business, which means we get to be really aggressive. It's a really good spot to be for us right now. And I think we get to do everything we can this quarter to help our consumers and merchants.
What's your assessment of the consumer, just how much spending power they have at this point?
Yeah, the state of the consumer is really consistent with how it's been over the past several quarters. From a credit standpoint, we're seeing outcomes in line with our expectations, which is really important for our business. Our ability to be more confident in how we go out and extend credit is a function of that consistent credit outcome. And we certainly have seen that. And our capital markets partners have seen that. And the other side of it is how active they are in the economy. And we're seeing a very engaged consumer, which is consistent with how we've seen it over the past several quarters. You mentioned the 35% GMV growth for the quarter. Mm-hmm. That's a really healthy clip of growth. And we talk about in our letter, that's somewhere between 4 and 5 times the e-commerce growth rate in the United States. And we think that's an indication that this consumer is both engaged in the economy broadly, but also preferring our payment method. They're choosing to affirm their gifts for Christmas this year, not just go out and engaging in the economy more broadly.
Michael, I'm curious how you're squaring that with the delinquency ratios. Seasonally, they are a bit higher, up about 40 basis points. It doesn't sound like, at least from your assessment, that you're considering this as a worrisome signal. I guess, why not?
No, it's in line with their expectations. There's not a delinquency ratio that's good or bad. What matters is how able you are to predict them. The other thing I'd note, and we include this in our shareholder letter, would encourage investors to go read it. If you look at our credit trends versus the broader credit space, the unsecured consumer space, Affirm continues to lead the pack. And so we feel like we're definitely in a really strong position relative to the economy more broadly, and credit outcomes are in line with our expectations. And that's true for us, and you see it in our business results and our strong unit economics, but you also see that in the capital markets. The people who buy and fund these assets are really engaged with us right now. They see the quality of the credit outcomes that we're generating, the consistency of the credit outcomes that we're generating. And when we get credit for our credit outcomes in the capital markets, our business really does hum.
Michael, it's a business that's expanding relatively quickly. You have a dominance here. You're a dominant player within the space. Just looking at your global footprint, you're starting to expand, right? And that is certainly a priority, it seems like, for Affirm down the line. I'm curious how much opportunity you see in the global expansion plays and how much that's going to play into your future dominance here within this space.
Yeah, we do have a market-leading position in the United States. One of the things that we showed in our letter this quarter is that we'd estimate that we're half the revenue of the buy now, pay later space in the United States. We're about a third of the GMV, but half the revenue. And the reason why we have more revenue share than GMV share in the US is because we provide the most valuable product to the consumer and to the merchant base here. And so when we talk about global opportunities, we talk to merchants in new geographies like those we're talking to right now in the UK, and they're excited because they see the value of the product that we bring to the US, and they're excited to see how we could bring that to their markets. And the merchant reception that we've had early in the UK is exceptionally strong. And that's partly why we have so much confidence in the next geographies. And we've talked about Europe as a next area for us to go to. And we're excited to go build our business in as many countries where the consumers are voting with their wallets for the better, more honest financial products that we can bring to the market. And we're confident in our ability to continue to build the most valuable products. And yet, I should point out, the opportunity in the United States remains very, very large. Mm-hmm. We always like to remind folks there's $1 trillion in credit card balances in the United States. Those are all, we think, addressable for Affirm. We think consumers are better off if they choose Affirm and our simple, honest financial products versus the risky products that involve late fees and compounding interest and a lot of fine print. And we think that opportunity in the United States remains very, very big. But because we have such a strong position here, we're able to lean in and chase new geographies as well.
Michael, before we let you go, let's focus a little bit more domestically, talking about a second Trump administration. I'm curious, from your view, is that good news here for Affirm? Why or why not?
We're able to operate really with any political system and any elected officials. Our focus is on serving consumers and merchants. We don't really have a point of view on who's in office.
Right.
The thing that matters most is that we deliver honest financial products to consumers, and the consumers need those. And we think that so long as the consumer is healthy and engaged in the economy, we're going to be there to support them. Right,
but Michael, does it change at all your strategy just in terms of M&A? You were just talking about expansion, just how you're thinking about growing your footprint?
No, M&A has never really been a big part of our strategy, and I think those conversations where it really is relevant for a lot of other players involve regulator scrutiny around M&A, and we're just such a small player that we don't spend a lot of time worrying about regulator attention to any M&A.
Interesting. All right, Michael Linford, Affirm's Chief Operating Officer. Thanks.
Thank you.